Hello, everybody. As we promised, we're gonna share today the lesson about the breakouts, just the regular breakouts. For you to understand, this is probably one of the simplest strategy, but requires a lot of attention. When I started trading 25 years ago, I started in November 1998. Once I got all the licenses, basically I traded in the beginning only breakouts because it's probably one of the simplest strategy. But a lot of people, who talk about the breakouts, they not explaining you the parameters that you need. So we're gonna go one by one. The first, definitely, you're gonna need a level. Very important thing. So whatever you call it in every book about the trading, technical analysis, support and resist. So just a regular level. But the level has to be very strong. Why? Because all the levels, this is a limit buyers or limit sellers. And if the level is not going to be strong, you're going to have issue. You're definitely never going to have a strong breakout. So first parameter. For the breakout, you need level. Once you identify the strong level, you need second thing, you need the energy. The energy comes from three different ways. First of all, it's accumulations. So when a stock or futures or anything else stay in an accumulation zone. So how you call the accumulation zone, it doesn't matter. The longer it is, let's say 1 month, 2 months, 3 months, the longer the accumulation zone, the easier for the company to break out. Why? Because the accumulation, that's when somebody is accumulating the position and then they take the stock higher or lower. So the second thing, definitely you need the energy. So first thing where the energy is coming from, as I said, accumulation. Second of all, it's a turnaround, so counter trend, when the stock went one way and then it's turned around. So you have an energy which came, let's say, from this side, and you're definitely going to know that some people are going to take profit. So it's a purely profit taking. It's a just turnaround. So the stock went this way and then it's going opposite way. So the counter trend. And the third thing is the news. And about the news, there's a very important thing you need to know. News usually, typically, divided into the fundamental strong, fundamental weak, and one-time news. What is a one-time news? So let's say the company got a contract. If the contract is not going to have an impact on the earnings in the future, so probably this is not a significant news and we call it one-time news. If the company have a merger and they buy somebody and let's say they went down, this is just a very little news in the beginning, but for the future reference, it can bring the company a lot of revenues. And if you see the news came out, the stock went up, let's say good news, but the stock right away the same day start turning around, something is wrong with that news. So what does it mean? It means that the news is supposed to work out in the chart. So if the news are very good, obviously the stock is going to go up probably the whole day because a lot of people didn't have a chance to buy. So this is three very important things. So it's a level, the energy, where the energy is coming from. So it's either the accumulation, right? Either the turnaround, the counter trend, or the news. So this is a very important thing you need to know in order to understand. When you trade breakouts, you have to understand why the stock is going to go up or down. So for example, if you have a strong level and you have a lot of accumulation above the level, you understand one thing. If the stock is going to break down, all of this is going to bring the stock down. So where the energy is coming from. So if the stock, let's say it's supposed to go up and it goes up very fast, you're definitely not going to buy. Why? Because the stock has not enough energy. And the most important thing, if you see the stock is going very slow towards the level, it has the very big opportunity to break. Why? Because usually when the big buyer accumulated the position, you try to accumulate it this very, very slow way. But if the stock usually goes up and goes up very fast, this is the best scenario. My personal advice, if you see such a big move, so if the stock is moving very fast towards the strong level, 90% of the time is going to be false breakout. So why? Because the stock already spent so much energy going higher, and most of the time when a very strong limits up there, you're not going to be able to break. So very important thing for you to understand: in order to break the level, in order to break the, let's say, limit buyer or limit seller, the stock has to have a lot of power, a lot of energy in order to go. So if the stock went for the long time, it took a long time for the stock to go up, most likely is not going to be have a chance, not going to have a chance to break. Why? Because it lost a lot of energy. In order to have a breakthrough, so breakouts, you need to have energy. If the stock lost a lot of energy before going towards the level, most likely it's not going to break. So you have accumulation, and most of the time once you have accumulation and it's not far away from the levels, it's going to be very easy for the stock to break. So you have to understand theoretically first before you go in a practical way, but theoretically you have to understand very important thing. So for example, as close as a stock close to the levels, the easier it's going to be for the breakouts. Why? We have such a thing is the ATR, average true range. For you to understand that 80% of the time stock goes only one ATR per day. I'm sure you didn't see this information in any book, because most of the people who trade, they don't know that. I trade this for 25 years. So you have one ATR. If you don't believe me, you take any single stock, any future, S&P, and you check. So 80% of the time, out of 250 trading days in the market, we're talking about the stock market, 200 days, the stocks or future is going to do one ATR, average true range. So most of the time, if you are staying in the beginning of ATR, so as close as you are to the levels, so you have a lot of energy for the breakout. This is a very important thing. So now you understand. So you need a strong level, you need the energy, you have to be close very well, you don't have to have a fast sudden moves, because fast sudden moves usually it's a distribution, so when the stock is already going up and it doesn't have much energy. But there is a one exception, and I'll tell you which one. If you see the stock went up a lot but still closed not far away from the level right here, it's going to have more energy for the breakout. It means the big buyer is there, big buyer accumulate the large position all over here, and he's going to wait. And obviously the accumulation is a very important key. The longer accumulation, the easier for the stock to go. And I'll explain for you why. Everything has an explanation. So figure out you have a very long accumulation, because a lot of books, they just say something about accumulation, but they don't explain why the accumulation needed for the moves. So each day is the bar with the daily volume. I guarantee you it's not in any single book. It's not indicators anything. So every single day is the value. So the longer you stay, the more value is accumulating. So let's say you have 90 days of the accumulation. So in 90 days you accumulate 90 daily bars. Obviously, one day represents a daily value. So if you have a 90 days of the accumulation, usually 65 to 70% changing hands, buy sell, and about 30 to 35% left for the big buyers of the total value. So out of 90 days, if you take 30 days, 27 days of it, this is a true accumulation. I'm telling you, it's not in any book. So you have a real accumulation of about 27 days. That's the value accumulation. Where this value can go? Obviously, if you have a 1 day of value and you have 27 days of the total value. Same like if you take the juice, let's say Tropicana, everybody knows Tropicana, and the Tropicana is, let's say, the one small bottle, let's say 1 liter. If you're going to try to put in the Tropicana more juice and then you try to squeeze, it's going to get out. Why? because it cannot absorb so much value. Here it's the same. So if you have a 27 days of accumulating value, this value has to go somewhere. Remember one thing, the daily value is the energy. The energy is never disappear. And you have a two different kind of energy. One is a static, one is a moving energy. And once you have a static energy, it's definitely going to begin as a moving average, as a moving energy. So once you see a huge accumulation, you definitely going to understand the stock is going to. And another last thing before I show you some charts, you have to understand that in a chart, there's always somebody losing money. So the more people here, if the stock is going to go down, first of all, it's going to be a lot of stops. And second of all of these people, they're going to start lose money. So let's say this is a zero. This is above zero, and this is below zero. Once it goes below zero, everybody, all of these guys, they're losing money. So that's why you have to understand why they're going to go, in this case, going down. And now I want to show you some charts. Okay, here's some examples. This is oil. So you understand one very important thing. First of all, you have a lot of people who's going to lose money once the oil is going to go below 79, 78. First of all, second of all, you see the very strong level right here, level with the false breakout. So very important thing. Let's see what we have. We have a very strong level. We have the energy. It's enough energy to push the futures, in this case, down. We have right here a lot of energy. So all of these guys, they're going to lose below 79, 78. But 79, 78, in that case, it's a zero. So obviously, they're going to lose. And this was an amazing entrance point and very fast take profit with a very low stop. So as I said, we're going to go one by one, and you'll understand. And of course, I'm going to show you the bad trades as well. This is the bad trade. You see, in this case, it's going down and it's not pulling up. So it means when the stock is not coming back, there is a seller. So in this case, it went down a lot and it's not pulling back. It means there is a big seller. So the trader entrance and got a stop loss. But you see, he still was in the right direction. The next day, the stock went down very big. So another way, I'm going to show you right now. As I said, very important thing. This is the daily chart. You have to make sure you have a very strong level. In this case, you see everything was fine. You see the stock went down, but the person got a stop loss. Okay, so let's see. This is a typical false breakout on a PayPal. You see, you can see the stock is going up, but the most important thing, remember one thing. If it's a breakout and the stock cannot make the breakout and it's going to start to pull back, it's going to be a lot of people who's going to try to take profit. Why? You see, in this case, the stock went up a lot. And there's a lot of people sitting and waiting to take a profit. When they take the profit when they have the energy. The energy, and when they see, they start losing money. So once the stock goes back to the short zone, usually if you take a level, the level breaks the zone into the long zone and a short zone. So in this case, once it gets into the short zone, that's it. You know there's a lot of people who's going to give away their profit, or somebody who bought it here who's going to lose money. So the most important thing, it's the level and who's making money and who's losing money. So obviously right here, it was amazing entrance point, very short stop, and you see it was a big thing. But overall, you see, once the stock shake everybody out, it went down. Why? Because a lot of people start losing money. So my friends, there's another trade. I'll show you the last trade. And the most important thing, as I said, you have to know it in theory. Where the people make money, where the people lose money, who is making, who is losing. So it's a Tesla. Tesla has a very strong level. What kind of level is that? It's called a gap level. Obviously, you know, below gap or above gap, people either make money or they lose money. So in this case, you see the level was all the time breaking up and down. But then you see the volatility went down. It was the very beautiful entrance, you see, with a very, very low stop, amazingly low stop and a huge profit. So when you trade breakouts, make sure you're going to see the level, the energy, and the right entrance point. Remember just one thing. See always where the stock came from. Doesn't matter the stock, futures, or crypto, because there is energy. If there's not enough energy, it's going to be very hard for the stock or whatever futures to go. So that needs a lot of energy. Good luck to you, and I'll see you in the next lesson.